Hi guys, Robert Rivera here with the Rivera Trading Group in association with Trading Academy. And I have a short video here in which I spent with the team going through some back testing on learning how to keep the risk management tight and on giving your trade a second chance. We went through a whole week of back testing on the live simulator, and I think you'll find this instructive. I think it is important to always remember to keep your losses short. And again, if market structure gives you an opportunity to take that same trade, then take it, confidently, based on the fact that you know how to manage risk. Let's go to the video. Especially because the daily seems to be bullish. 4 hour is bearish at the moment, but the trend is bullish. There you go. So I guess my bias is bullish. So let's go ahead and get this thing started. Let's start moving this candles. Okay, here's the movement. A price. Timeout. Does that mean that we're already breaking into bullish territory? Oh yeah, we already broke out, but now it's going to be bullish. Okay, let's go look at the daily. It's bullish. 4 hour is now bullish. The 1 hour is bullish. The 30-minute is bullish, and I have a clean range to the top. Okay, this is a supply area, so that's kind of a little tricky. And it is early in the evening, so I'm gonna only go with 1%. I'm gonna take a 1% risk. Okay, so let me see. Let's go measure those pips. So that's 9 pip range. That's not bad. 10 pips. So I'll put a 10 pip, 10 to 10. Okay, I'm gonna do a 1 to 1. 10, 10. Okay, we're buying. Boom. I kind of bought a little early, I guess, because it hasn't really broken through that. Well, it did poke its head out. All right, let's go. Let's keep moving. Next bar. That's not what I wanted. I wanted to click here. There you go. Okay, let's see what we get. Where's my trade? Let me open it. The break of the low right there. What? Why didn't it stop? I guess about there. Let's go ahead and close half of it. Okay, so that was, cut it in half at 4 pips. Let's see if it holds. Here you go. Let's see if this holds. It looks bullish. It's looking pretty good. All right, there you go. This is a 2 a.m. candle, by the way, on the 30-minute. It's having a rough time holding above. That's not a good sign. So here's the deal. The candle close broke the previous 30-minute low, and now it closed bearish. I'm closing the whole thing. I'm closing the whole thing. I was risking 1%, and now I'm only going to lose 0.64%. I'm closing the whole thing. Okay, because once that 30-minute closes bearish, it's not going to be. It's the higher probability is that the next bearish candle is going to continue going down. Okay, so I'm shutting the whole thing down. Boom. Okay, and let's see. It's still early in the evening. It's 2:30. All right, so I shut it down. I closed it. Okay, let's see what would have happened, and let's see if we get. See if we can give our trade a second chance. Okay, let's see if we can give our trade a second chance. All right, let's go ahead and keep moving forward. Sure enough, boom, there you go. That would have been a stop loss. We would have lost that one. It's still early in the evening. So, and now this is the open of London here in 2 simulation minutes. Okay, boom. Okay, so let's take a look at the daily is bullish. The 4 hour is bullish at the moment. The 1 hour close bearish, and the 30-minute close bullish. Okay, I'm of the opinion, having had this wick here, because everything else is bullish, and once it breaks through here, it's going to turn, everything's going to turn bullish again. That if this candle breaks the high of that candle, we're going up. So I will give my trade a second chance. If it does that, let me measure my entry to my stop loss. It's about the same. It's about the same. Let's put 9. And since it's going into an area of supply, let's go do a 9.9. I'm doing only 1%. If it actually breaks through, let's see if it breaks. I'm just anticipating it will. There it is. Let's go. We bought. Okay, I'm not sure if you can see the lines. Stop loss is down here. Actually, it should have covered that wick. Let me go ahead and modify it. Modify my trade. Okay, grab my line, move it down there below, and my take profit. Let me just move it just a little higher. See if we can get just a little more out of it. Let's see what we get. Here we go. Okay, if it breaks the high, it's going. If it breaks that previous high. Okay, otherwise we may have to again eat another loss. It's fighting this spot. There you go. It wants to go. There you go. Come on, let's go. Struggling here, but if it breaks through, it should go. Okay. There you go. There you go. You gonna get up there or what? This is now 3:30. See, what are we? 7, 8, 9. If I can get 9 pips, that's 1-to-1. There you go. It wants to. Look at that. Look at that. There you go. Boom. Winner, winner, chicken dinner. So the idea behind it, right, is everything was turning bullish. I knew it was early, which is why I only wanted to risk 1%. Okay, I only wanted to risk 1% because it was early in the evening. It was the beginning of the move. Okay, the candle broke the previous 30-minute candle to the downside, so I closed half of it. And then the moment that the candle closed bearish, I went ahead and closed the whole thing. And sure enough, it would have taken me out for a full 1% loss. Instead, I lost 0.6. Now, given the way that this candle printed and the action of the candles and how everything else was bullish, I gave my trade a second chance with only, again, 1%, willing to lose that 1%, and we won that full 1%. So now we're up 0.4. Let's look at our stats. 2.6% gain, okay, which on a $100,000 account, that's $2,500 for the week. Can anybody be okay with a $2,500 week? You know, that's a $10,000 month. Are you good with 2.5% gain, 2.6? Okay, this is the most telling part, and this is the part that you really need to pay attention to, and what I've been really trying to strive to tell you about when it comes to risk management. You saw me cut 2 trades quickly, right? And then when it came back, I took it again and we won on those trades. But you saw me cut them out quickly, and then one that was an absolute loser, also we cut it out quickly. Check it out. The average profit trade was $826. The average loss trade is 471. Okay, so how many weeks like this can you do? Forever. You're winning almost twice as much as what you're losing. That's golden. And so I guess that's really what I'm trying to emphasize, is that whether this strategy or any other strategy, it doesn't really matter what strategy you're using. The point is risk management. You know, cutting your losers short. When your losers are losing, get the heck out. Give your trade a second chance if the market structure and price action tells you, okay, you're good to go now. And if, as long as you're managing risk, and as long as you are conscientious of not letting your losers run against you, you're going to win. Because how many strategies do we have that we talk about in the academy? All of them are positive percentage winning strategies. So if they're all positive percentage winning strategies, then it's just a question of cutting down your losers. When you have the confidence in yourself that you know you're not going to let that 2% risk go all the way down to 2% without chopping it up, you get more bold. You start throwing in a 3%. You start throwing in a 4% lot, because you know that if it doesn't work, you can cut it down. Hi guys, welcome back. I hope that you were able to benefit from the video. I mean, this is just a short example on how to cut your losses short and how to give your trade a second chance. If you saw the stats, by the end of the week, we were up 2.6%, and that's risking no more than 3% on any given trade. We were ranging between 1, 2, and 3% on each trade. And by managing risk, we were able basically to win twice as much as what we were losing. Again, I hope that you were able to benefit from it, and I'll see you on the next video. God bless you.